Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for September 30th, 2025. Last trading day of September, last trading day of the third quarter. Markets were down much of the day, but rallied into the close. As we close, what will certainly be remembered by me as a September to remember, where the markets seem to ignore what's historically the weakness of this time of year. Now the question is, what will October bring? Again, my name is Jeffrey Scott. My email address is marketmripro@gmail.com, and my Google group is called Top Down Trader. As always, these videos are for educational purposes only. Anything I recommend should always be taken in the spirit of education and not investment advice. The intent of this video is to demonstrate how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor. And I have tools in multiple platforms. On Tuesday, what was most remarkable, I would say, was the breakout by healthcare. But we knew that because on last night's video, frankly, everything was healthcare when we looked at the top stocks and the leadership. So certainly was not a surprise to me. My Google group is called Top Down Trader. How do I join? You go to Google Groups, go to all groups, just search for Top Down Trader, and you let us know how you want to be contacted. Our meeting is coming up. We are less than a month away. I'm so excited. I've been working on a lot of new material. Also going to talk about how I traded up and doubled my portfolio as I showed everybody by July, and how I performed off the bottom. Started with a small account and added some cash to it, but probably one of the best years. And it just reminds me the benefits of high growth stock investing at market turns. We had a turn. I called it on April 7th. And if you look at return to date from April 8th, we'll talk about it at the meeting, but that has driven quite a year for me and the Scott family. 2 days live trading and education. Palm Beach Gardens. We are just north of Palm Beach International. We're at the Marriott Palm Beach Gardens. 2 packed days of education and software. $1,250 includes breakfast, lunch, and dinner on Sunday, breakfast and lunch on Monday, dinner cruise on my yacht on Sunday night, and we'll have at least one pre-meeting session and then one or two after the meeting. There's live and online options. It's going to be a small group because I can't hold more than 12 to take anything more than 12 on the boat with a stewardess, a captain, my wife, myself. The boat will get a little bit crowded, so we don't want to do that. 155 a night for the Marriott full service. I also give you a $400 rebate. What does that mean? It means you pay for the meeting. If you got my tools, you use it for next year's or the following year's Palm Beach meeting. If you don't have my tools, you can use it as a discount against my tool set. And then totally separate cost, etc. John Person has a meeting the same weekend. His is Friday and Saturday, mine is Sunday and Monday, and we hope to launch John's add-on for Market MRI Pro during that weekend. Again, Jeffrey Scott, marketmripro@gmail.com. I do these infrequently, no more than twice a year, mostly once a year. It's been a couple years since we've done Palm Beach. Frankly, I don't do it to make money, although now I can sell tools. I do it because I like to teach and I like to see the folks that I interact with online. And, you know, the fact that I have the same people that come back to every meeting either means they like what I'm doing or I have just very few friends. Maybe it's both. So we're going into Wednesday. We got the ADP employment. I mentioned this morning that the market, or yeah, excuse me, not this morning, Monday night, that the market might not be happy if we miss on consumer sentiment. And I think that was certainly a part of consumer confidence fell to 94.2, missing a 96 estimate. I think that was part of the weakness that we saw early in the day. After hours, not much in the way of earnings, but the earnings that we had Nike, the earnings were received very positive and it was up after hours. Right now, if I just take a quick look at futures at 8:48 p.m. on Tuesday Eve. Okay, let's see, change that screen. They've dropped. Dow's down 100, Nasdaq's down 100, S&P's down 21, Russell's down 10. So maybe we got some weakness coming. A lot of this is probably related to the government shutdown. And I saw a chart that I was looking at prior shutdowns and their the impact. There's no real consensus of that it's even that bad and it causes any long-lasting damage. But I think uncertainty is never good for the U.S. markets. Speaking of uncertainty, as I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled, and we have a lot of earnings coming over the next couple of weeks. Any information about anything I talk about, my trading platforms, my style of trading, ask me. marketmripro@gmail.com. Support on the program, coding at marketmripro.com. Other things, please hit subscribe, hit the alarm. You get notified when I post these. Remarks are welcome via email or in the YouTube section. Thumbs up, help me get promoted by YouTube. And we'll see you in Florida. All right, so if you look at the ETF return, Spider Q's Diamonds Russell. The low was 0.14, the high was 0.38. They're all up just a bit, but interestingly, they all finished in the upper part of their daily range. That to me is more bullish than the numbers would suggest. Bitcoin was up just a bit, also finishing at the top of its range. The dollar dropped 11 cents and volatility was actually lower. So a positive day in the US markets, but not one that was a massive move by any means. The new highs minus new lows at 52 weeks, still positive on the NYSE and the NASDAQ. The numbers are smaller. When you look at sectors and industry groups, minimal change from the prior session. 55% of stocks are up in the S&P 1500, 44% of the NASDAQ, 47% of the NYSE. So at best, breadth was mixed, certainly not a super strong breadth day. When we look at what led, look at the breakout in healthcare up 2.41%. It actually opened down and traded higher the rest of the day. There were a couple of biotech, I think there's some takeovers and some good news. Also, I think you got something that's massively underheld right now, and it's probably part of why it's going up. 2.41 for healthcare, 0.77 for industrials, 0.55 for tech, and you could see how it drops. And then on the bottom, you could see the big loser was energy. On the themes, the strength was in aerospace, defense, biotech and genomics, and semiconductors. China discretionary, robots and artificial intelligence, copper, gold, autonomous vehicles, silver, all were up as well. So strong day, kind of a mildly up day with not great breadth. All right, if we then move and we look at the timing model, we continue to be in buy modes green on the daily. The Russell still has a mixed picture with the red bongo, but it's still in a buy based upon the definitions. If we look at the weekly charts, they are also in a buy when they flip for us. You can see all four of the weeklies are in a buy. And remember, we're at all-time highs on the spider. We're just all-time closing highs, perhaps, on the weekly bar. On the Qs, the diamonds are all-time highs. And the one that's been off a little bit is, these are on the weekly, is the Russell, which set it last week. So markets have been super duper strong and they are what they are. If we look at the US index ETFs, I think I see some good stuff here. Number one, we're done with the crappy seasonality. September's over. Yay. And this is predicting based upon the last, 10 years worth of data. Pretty darn good. We have the 17 as close in support, which held with the last little pullback. Here's the 50 holding. The OBV is above the moving average. I look at this and I think it looks good, and I bet it goes off to challenge the past highs. So I think the spiders, and this is daily, look good. If we look at the Qs, same story on seasonality, woohoo. Nice positive session. Not up a lot, but the candle looks good. And again, I've got the 17 and the 50 right underneath as support. OBV trading above the moving average. I like it. If I go and I look at the diamonds, positive seasonality, just off all-time highs, traded down and bounced off the 17. Still has the 50 as well underneath for support. And even the Russell, which has been the laggard for so long, nice looking candle, a little bit of a bottoming tail, holding at the 17 as it's held there and it held there. 50 is not that far below 231 versus 242, so about 4 to 5% below. I think we hold here and we go higher, but even if we have a bit of a correction or breakdown, one would think that we're in a pretty good position with that 50 right underneath. So hard for me not to be bullish. Volatility, you could see it was up today on the volatility futures, but closing in lower than the midline of the bar. And if we look at the dollar, it's broken down a bit from where it traveled last week. It was down just a bit, 0.11. Some of the big stars in the market have been the commodities. We can see another big update by gold, up 0.85%, while silver, which had been moving just as well, was off a bit, 0.31. Oil failed at the 50, and natural gas, I may have to start looking at it again. It's at least broken above the 50-day, but it's way below the 200. And then let's just look at the 10-year and the 30-year. I think these are important to watch. Kind of looks like a reversal day to me. A little bit of a flag here after this run up. A bottoming candle closing near the high of the session, but only up 0.12 on the 10-year. And the 30-year, which I'm watching, and I'm watching the 5% level as sort of where I get very nervous. Bottoming candle. Again, is that a reversal day? And are we going to go back up here? We could, but we got to get through the 50. We got the 200, the 50 before we get anywhere close to threatening. So feeling okay right now about rates. So rates are okay, dollars are okay. I think the markets go higher. Now, I'm not ignoring those futures. A lot of times news will impact the open, and by the end of the day, things have recovered. I also don't think that a government shutdown is the end of the world, lasts forever, and it, it's a point for argument for the House and the Senate, the Dems and the Republicans. But at the end of the day, they typically find a way to come to an agreement, and I would expect the same thing here before, not before too long. Now, it doesn't mean for new friends that I met from New Jersey who's a government employee who's essential, which means he gets to work and not get paid, air traffic controllers. So many folks that will have issues if it goes on for a long time. Your heart has to go out for them. Just hope that our dysfunctional government can figure that out, and they usually do relatively quickly. Buckets were interesting as we're starting to build up stocks at the bottom on the NYSE and the NASDAQ. The S&P 1500 actually shifted a little bit to the right. Um, Perhaps the stocks are bigger here in general than they are in the NYSE and the NASDAQ because it was the Russell, which is the big shift. Now, 13%, 8%, 10% living underneath the Bollinger Bands does not make a massive shift or problem, but another day or two building up there could set us up into a place where you'd expect a rebound. Market breadth, another day, another big move on the NYSE and the NASDAQ composites. I just looked at volume, 13% higher on the NYSE than average, down 1% on the NASDAQ. At best, it's mixed. We're still holding at 4 distribution days on the NASDAQ, 4 on the S&P 1500, and even market surge has exposure of 80 to 100% in stocks, saying being in the markets. Now, here's something that bothers me. Certainly a strong day on both of those indexes. Why did the stocks above the 20, 50, and 200 come down in the setting of a nice day? Why here on the NASDAQ, the same picture? Why is the AD line negative on a strong day in the market and mixed on the up-down volume? No new signals here to tell me anything except we did have a bango again on the NASDAQ, which is a little bit of a irrational exuberance, which is good, but you don't want to see too much of it. And we've seen a lot of those signals on this run up. Now, I'll take the breadth story a little bit further, and I think you do have some different tails here. Look at the two on the right, the NASDAQ Composite and the Russell. Higher highs, just off all-time highs on both of them, yet AD lines in magenta keep falling. Stocks above the moving averages keep falling. 13-week new high, new lows keep falling. If you look over here at the spider, you actually see these things have turned up. So I think the story there is the larger caps are holding up better than the small caps. And the S&P 1500, as it did in the prior one, looks better than the Russell and the NASDAQ Composite. What else can I tell you about this? 13-week new high, new lows have bounced significantly, but 0.81, not problematic. Over on this one, 0.52 is not a big problem. Over here, 0.56 and 0.62. So none of them are showing extension and I need to pull back here. In fact, except for the spider, they're all kind of weak. So let's put that all together. We have decent averages, kind of weak underneath the averages, ending a weak part of the year. November and December are the superstar times of the year. October can go both ways. And typically, when the markets have been strong during the year, the last quarter is strong as well. If we look at ratio charts to see if the pattern has changed, we could see strength remains in technology and in communications. I'm looking for healthcare here. Look at this move in healthcare straight up, showing some emerging strength in healthcare. So let's go look at the top-down stock approach. And we're going to start by going into the top-down tab. And we're going to look at where the strength in the market was today. And like healthcare, industrials, and basic materials are the leading three. Now we're going to go over here. These are the leading three. These are the industry groups in the leading three. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. A little bit surprised I don't see biotech there, but lots of other medical related. Here are the 235 stocks that come out of that list of industry groups, and let's filter them for $5 and 500,000 shares. And tonight, let's do pullback and uptrend scan. That brings me down to 34. Let's rank them by the number of impulses higher and lower. And let's look at these very quickly. Thermo Fisher Scientific, interesting. A run up, pullback, and a big breakout on a massive move today. It was up 4.97. Were earnings today? Nope. What was the news today? Offering, power inflow signal, a key bullish indicator. Okay. So I'm looking at it and I'm seeing a breakout above the 50 on good volume with a CPR volume breakout momentum coming out of a squeeze, relative strength turning up, OBV not there yet. I like Thermo. I think that looks great. Next one is Merck and Company, another tall candle. You know, Merck, I think, pays a dividend, probably 3%, 3.11. Earnings are going to be 237 versus $1.57. So that's up, that's big growth. Revenue 1.7 billion versus 1665, a little bit of revenue growth. I'm dividend paying stock, dividend at the low historic range. I'd like to see it get above the 200, but another nice move there. CRH, I think this is a heavy machinery company. Wow, we drew this line here because it was basing. What a big move today. Um, Earnings are out the 6th, so you got another month. It's going to be $1.94 versus $1.95. Just every other quarter they're presenting. A billion versus 967. So a little bit of growth, not much. Was there news today? They sent out new growth targets, and obviously Wall Street liked it. Let's look at a weekly. You know, this one looks kind of interesting. Do your own research. Why am I talking about it? Why do I like it? Well, it's in an uptrend for a long time, which is the blue bars on the bottom. It's had a recent choppy pullback period, recently reverted to an uptrend here. I like big gaps as a start of a move. Think of episodic pivots. Massive volume. Ignore the fact that it's red. It's red because it's closed below the high, the open, but a massive volume day, lots of blue dots. Look at that relative strength in OBV. What else do we have here? QD Insurance still pulling back. We'll see if that breaks out. Agilent, another testing development company just like Thermo. A breakout, a retest, and another big move on volume. Pfizer at the White House today, kind of a dead stock for a long time. I know people that just keep buying it because look at that dividend right now. 6.33% on a blue blood. 79 cents versus a dollar. That's the problem. It's not growing. Its portfolio is getting old. They have to make more acquisitions. But as long as they keep that dividend, loo la la la. Lilly, um, one of the big winners in the diabetes battles with Manjaro. Again, I like to buy things above the 200. IQVIA, a competitor of mine, a medical data company, a breakout above the 200, a pullback, and didn't this breakout here didn't work. But could you take that out, kill it, and maybe come back and say, now's the time? That's a person buy signal, decent volume, a CPR, breakout momentum. So that's one way to do top down. Lots of healthcare stocks coming up, and that CRH looked interesting. Um, VRT, Vertiv Holdings, is a data center play in that it does a lot of the work to help cooling of the data centers. Is it sort of a cup and a handle now a breakout? Still got to break out, but that one looks interesting here as well. That is how I do top down. And there you are with me talking 23 minutes. I've identified a handful of stocks that I might consider for tomorrow. Now I can't help myself, which is what I refer to as bottoms up. So if I flip back to the list here of the main stocks, take out my filters, I've got 4,000. Wow, we have 4,000 stocks today. It's kind of the highest we've seen in a long time. And up 38.78. I don't know why top down so far. That's a lot of stocks. Still one of the higher numbers. And what I might want to do to make the analysis easier is do my special favorite scan, which is volume, 500,000 shares, price over $5. I want uptrend so that weekly bond goes up. I want you above the 200 MA, and I like to see my 2-day momentum signal, which has been my go-to signal. And let's take a look at these, and I see healthcare galore. Healthcare, something has changed. GSK rallying on the ouster of its CEO, or the retirement or move of the CEO. I don't know what the story was. It's interesting to me how you get two super strong days with the CEO leaving. It looks like it's getting extended, although it was going sideways for so long. I'm not sure. It bothers me. Um, I don't know if this is anything more than changing CEOs, which I've worked in public companies. Um, steps down, steps down. Yeah, I don't know. I guess the insiders who know this company must like this person. Again, you sort of got a cup handle and a breakout, so that could be interesting. The volume's good. And what was their dividend? Their dividend is 4.44%. IPG, Intergroup of Companies, Communication Services, kind of looks like that Thermo did. Breakout above the 200, a retest, and now a pretty significant breakout. Notice the driver in each of these stocks is this line. Here's the squeeze, and these blue dots above the squeeze are my momentum moves. Two in a row is impressive. Three is hardly ever seen. Jazz, another smaller biotech, run up sideways move. I think before I would be looking closely at Jazz, I would probably be looking for it to break out above that line. We're not that far away. JCI, Johnson Controls. Again, I think I'm seeing a stocking consolidation, and you shouldn't see the momentums signals in consolidation unless something is going. You had a high close doji today. I think I'd like to see a break above that line, but that one looks like it's setting up. MMS, Maximus Industrials, don't know anything about them. High type flag, kind of a high, big run up, kind of a flag, and now a breakout. Um, Relative strength and OBV look good. There's a lot of pretty stocks on this list. You say, well, I like my scan. OMC, I think they might be in advertising. But again, that beaten up rotation story of a stock that's dead flat breaks above the 200. Often there's a retest, but this one had a second good day in a row, three blue dots in a row. TBN rather. Don't know this guy. Camberin Resource Company. Energy. No fundamentals. Often means it's a new stock. Merger of, all right, so if there's M&A activity, I have no idea what to say, so I don't consider these. Teva, a storied pharmaceutical company, Israeli company, looks like it's breaking out. 68 is going to be against 69, so relatively flat. 436 against 432. No dividend. These things are trading at low on their historical PE range. So this story here is about the dots, top value stock for the long term. All right, well, that's kind of interesting. Earnings are coming up in November. So this one, um, powerful move here, took out that high. I could get behind the story here. A lot of healthcare stocks. And then lastly, VIV, which I think we saw. No, we saw VIR. This is a telecommunication services company. Does it pay a dividend? 3.3%. 19 cents coming in against 18 cents, 258 versus, well, massive bump in revenue for whatever reason. Um, Remember, this is purely a technical scan. I don't care what the company does. I don't looking at earnings or anything here. I'm looking purely at stocks giving me a pattern that looks interesting. And here's a triple top. That's an interesting pattern. Beautiful uptrend, sideways move. To me, a breakout of that triple top becomes compelling. So there you have it. Now it's at 29 minutes. You've had a deep look into the stock market breadth, timing, market rotation, top down finding of a number of stocks, and then my bottoms up approach, looking at my favorite tool, the 2-day momentum. If that doesn't give you ideas, we'll just leave it at that. Have an awesome day and rest of the evening, and we'll see you tomorrow after hours. Take care, everybody.